Meta Platforms, which is probably an A-tier advertiser, they've had some issues trying to attract people lately as a result of Apple, although they announced that they're attempting to use some AI to get around that a little bit. That's probably a work in progress. They're probably an A-tier advertiser. They also got reported some kind of cyclical dropping this time. Their revenues for the group were down 1%. Their earnings were down 36%, which is not good to see. You don't like to see, if you're a shareholder like I am, you don't want to see your company making less than it did before, either in revenue or in profit. And if it's Meta, okay, that stock has come down quite a way. It's in quote-unquote value territory, where I think it has a sort of lowish double-digit price-earnings ratio. You can probably use that price-earnings ratio for valuation because it doesn't have any debt. The real question then when I look at it becomes, is this a sign that something's going wrong at the business, or is it a sign that it's just a kind of softness in the kind of advertising space, like we saw from Snap and Twitter and so on, kind of forecasting a little bit? And my answer is probably that it's a sign of softness in the advertising space, for what it's worth. Mostly because they offer you kind of 4 metrics for tracking users and what's going on their platform. At the moment then, given that there's struggles around targeting advertising, their sheer size is going to be their kind of proposition to advertisers. It's going to be, we can get your stuff in front of lots of people, which means that they need high user numbers. And their user numbers are high, even if they're down or up slightly, either way around. They offer you kind of 4 metrics. They offer you kind of daily and monthly active users for Facebook, the Blue app, and the family of apps as a whole, so including WhatsApp and Instagram. Everything's up slightly, apart from the monthly active users on Facebook. So it tells me that there's still a kind of biggish proposition there, that things aren't particularly going backwards. Even though there's less money coming through the door, that's probably to do with sort of macroeconomic softness in advertising, rather than a sign that any of the platforms are particularly sliding backwards, although we may see more of that in the future, I guess. Steve, what are you Googling there?
I was just looking at seeing if I could find Amazon's marketing division and just see, just get the exact numbers for how much it grew. That was posed to me as the sort of main issue for Facebook's is marketing, is that Google and Amazon are literally showing you an advert for something you searched for, whereas Facebook is trying to figure out what you want or chase you down with something you wanted previously. And I know that Amazon, in that regard, is very, very difficult to compete with because, you know, it's an active search rather than passive. So that would be the main reason I would think that Facebook's advertising has slipped somewhat.
Yeah, I said to you in chat just after the earnings from Meta, and it speaks to Roku as well, right? Roku you can think of as, I guess, a sort of almost leveraged version of something like this, in that it will go up more and down more than anything in the good times and the bad times. But obviously I kind of knew this deep down, but one of the things that I'm taking away from this earnings season is just how cyclical some things that are not officially cyclicals are. So something like Meta Platforms, slower economy, businesses pulling in marketing spend, less money comes in through Meta Platforms' doors. That's really, really obvious when it comes to it, but I had thought of it as more of a kind of, maybe not kind of straight line or linear or something like that, but a sort of fairly steady growth story. And I'm reminded at this point, and the same's true with Google, actually more on that in a second, that, these things are not immune to macroeconomic shifts. They will do better in good times and worse in bad times, maybe sort of less dramatically than some other ones. But there's still definitely cyclicality there to pay attention to. And, sometimes it's just important to be reminded of really obvious things that I sort of knew deep down, but kind of forgot, I think.
I've noticed there's been quite a sort of turning up of the heat on Zuckerberg's metaverse spending. I think a lot of people think he's maybe taken his eye off the ball, and that's potentially why Facebook is slipping in the way that it has. And obviously Instagram recently has come under some criticism from the Kardashians, I think it was, wasn't it, who said that it's getting too much like TikTok. And they asked about that in the earnings call. I did see that, and in response they said that, we've taken that feedback on board, but generally the future we're heading towards is short form video. We'll still support photos, but short form video will be the future. So just generally, do you have any quick thoughts on that, Steve, before we move on? I thought metaverse is, I think Zuckerberg's been very clear about that. He's going to spend a hell of a lot of money on this, and he doesn't know whether it's going to work or not. He thinks it's going to work, obviously, but he's not telling you with any certainty. And secondly, about the direction of Instagram, if you're at all interested in that.
I'm not interested in the Kardashians as a general rule. However, it's one thing for me to be sneery about them in the sense that I don't want to follow them on Instagram because I'm not particularly celebrity enthusiastic. But as a Meta Platforms shareholder, I am aware that the popularity of the products I have is partly slave to them, and that they have a genuine meaningful impact on the kind of success of our platform. So actually we need to take this stuff really quite seriously. The Kardashians are significant in terms of Instagram and so on, even if I don't view them as sort of central to the running of the business in a certain way.